Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Today we're going to do something a little different. It's really what I do in my own personal trading, what I do when I'm setting up my game plan and heading into each day. I'm preparing for what I expect to have happen. And we're starting to work this into the boot camp a little bit where I guess sometimes I could take stuff for granted that I teach and expect it to be understood, but it took years to learn how to do it myself. So I guess it's, you have to keep going over it and over it. And it was actually something that was brought up yesterday where somebody said, I finally get it. After hearing you say it every day, I finally get it. So we're going to cover that today. We're actually going to take the universe of stocks that I normally watch. And whether you're a day trader or a swing trader, it doesn't matter. The principles still apply because as a day trader, you can use the daily charts. As a swing trader, you can use the weekly charts. Either way, it's the same because what we're looking to do is we're looking for when the next candle forms. So it could be a weekly candle, it could be a daily candle. What do we expect to happen next? And I know that sounds like we're predicting. We're really not. We're just putting the pieces together. That's what tape reading is, and that's why I say we're building an argument for great ideas. And the most shocking positive aspect of really learning how to read the tape is you immediately start to stay away from crappy ideas. There's no other way to put it. Once you stay away from bad ideas, ideas that don't have a great argument, or ideas where you can't look at that and say, I'm not sure what's going to happen tomorrow. You just leave it alone. I'm not sure what's going to happen next week. You just leave it alone. And that's where most money is lost. Most money is lost by looking at a chart. We actually had a few calls yesterday in our game plan meeting where the stock was basically sideways. It hasn't done anything for 8 weeks, and somebody's saying, is this a good idea? The answer is no, and it should be obvious to you. Now, that was somebody who just joined the boot camp yesterday, which, by the way, you absolutely need to be in the boot camp. There's just some amazing opportunities, and the lessons that every single day, that's probably the biggest part where you're getting real-time lessons while the market's unfolding. We have charts, conversations, and literally like drawing circles and saying that's the lesson. You need to be in the boot camp right now if you're not achieving, if you're not taking advantage actually of what's available in the market. The SPY has crawled this way all the way back to all-time highs. If you're not making money on a week in and week out basis, you're missing something. Get in there. The cost to join me in real time for 30 days is less than one stop loss. Think about that. It's crazy, the tiny investment for 30 days of trading together. So what we're going to do today, we're going to work today towards going bar by bar by bar in some of the stocks that are in my universe and mapping out the probability of what should happen on that open and which ones are obvious and which ones aren't. And we'll just stick to that. That's it. And that's how the game plan starts. So when you go into the day, when you go into the week, you already have exactly what you expect to have happen. And here's the thing, and somebody brought this up yesterday, which was just awesome, just really, really awesome, where they said I had 5 stocks. Only one of them did what I expected it to do. I ignored the other 4. That's where trading becomes stress-free. That's where trading becomes fun again, because now you're not fighting. You're not trying to use like these mind-melting tricks where you're like, move, no more. You're just saying, okay, this is what I expect to happen based on X, Y, and Z. And if it does, then I'm going to only trade those stocks. It's when you start trading the other stocks that aren't doing what you expect to have happen. That's where you go crazy. That's where trading becomes stressful. That's where you're like glued to the machine. You're like, please go up, please go up, please go up. You don't have to do that. Just pay attention and it becomes easier. The problem for most traders is that they don't have a structure for what's supposed to happen. And that's why we have to be in the market every day together. That's why we have to be talking every day together. If you're an active trader, especially if you're home every day right now, it's invaluable while it's unfolding, talking about it. While it's unfolding, talking about it. Anybody can pick out the chart at 9 o'clock at night and tell you what should have happened during the day. But can you do that while it's happening and actually make money? That's where the magic happens. So let's go over to the charts. And we're going to actually just do it by percentage gain yesterday. This isn't my full list, but it's a list that we can watch. So we're going to start out with Wayfair. Now, what's interesting about Wayfair, obviously the stock has rallied the last few weeks, and it's actually still sitting at all-time highs. So now I'm looking at the stock, and I'm like, all right, what's going on? Well, immediately we were inside 2 days ago. Yesterday was a rally, and what we call well bid. but we have wick, 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 right? So wick is where it goes all the way above or all the way below. So I'm looking at this and I'm like, all right, if I want to swing trade the stock or day trade the stock, it looks like the stock is having a hard time at $210. That's really what I'm looking at. Now, classic technical, $310. Classic technical analysis would be like your stop loss is all the way up here, so is your breakout. That's bull. Maybe it traded up there, pulled right back. Traded up there, pulled right back. Got above it, came back. Got above it, came back. Couldn't get through it, right? Got above it, came back. Couldn't get through it. Got above it and pulled back a little bit. So this is the real level. So if I'm looking to swing trade this stock, and by the way, that's all you need to do. It doesn't need to be more complicated than that. When a stock starts to go into a box, you have to say to yourself, that's the right price right now. That's the right price. And if we're looking for a bargain and we're looking for a profitable opportunity, somebody has to step in and say that's not the right price anymore. Obviously, supply or demand, right? That's not the right price. I want to start buying right now. I think it's going higher. And the powers that be, the smart money that can push markets around, that's when they start to step in, and now it becomes a different price. And that's where well bid comes from. Well bid is higher highs, higher lows. That did not happen here. This candle was completely inside the previous candle. So nothing happened. Then the next day, they held higher lows and they made higher highs. So in this instance, when you combine this with what just happened yesterday and the fact that 310 is the level, if I'm looking to swing trade this stock, I like it long as it's above 310. If I'm looking to day trade this stock, I want to be long as it's above yesterday's close and today's open, but I'm only trading off of this because we technically have like a 5 or 6 day trading range. So my conviction level is a little bit lower, so I'd start to work the order. So let's go to the next one. This is interesting. It's interesting to say that a stock at all-time highs might have indecision. But if you look at it, Apple opened and closed very close to the same place yesterday. I call that a melted candle. So if you can think of a candlestick that melted all the way down, there's only a little body left, that's a melted candlestick. And a melted candlestick shows you indecision. So the fact that it's at all-time highs, the stock is clearly a buy. But what can you gain from yesterday's price action? Well, we were well bid one day, now well bid 2 days with a gap here, but the gap led to indecision. You want to see a gap that leads to one of these days. So the conviction for yesterday was much lower. So we're probably going to end up filling the gap today before we look for a spot to buy, and the spot to buy would be here at the previous day's high, filling that gap. If it opens much lower than that, then what are we looking for? Well, then we're looking for an intraday signal, not a day trade, not a swing trading signal anymore. Now, would I be initiating a new swing trade long after a indecision day? Probably not. Probably not. And if I was, I wouldn't be bidding into weakness. I'd be looking for a higher opening. So I probably wouldn't be bidding this one. All right, so DocuSign. This is one that we called out yesterday, and we just absolutely nailed it, where we talked about looks good, something changed, looks good again, something changed, right? Indecision. This is still well bid, but indecision, and then we have indecision again, and that led to this. So we said as this was coming down, we were looking for a spot to buy, looking for it to start heading back up again. So each of these lower closes, we were looking for a lower opening and for support to come in, and we didn't get it. So as it was going down, specifically on this day, we started to buy. This is interesting because this is where it was, and we were looking for a retest of the previous day's low. It actually opened higher, so we let it go. Because we were looking for the final sellers to come in and then buyers to stop at the previous day's low, we didn't do anything. Then as it starts to push lower, this day here, we're finally getting the open that we're looking for. It opens flat, trades a little higher, and then pushes down. Again, did not follow through, but that didn't make it a bad trade. Now, on the daily chart, something dramatically different happened. We had indecision again. And indecision reverses momentum. So this actually, we can even start here. This momentum was reversed by these two indecision candles. This momentum stops with this indecision candlestick. So remember, indecision means it's obvious. Prior to indecision, it's obvious with those big red candlesticks. And then you get a melted candlestick, say something changed. The selling pressure is not the same. It's indecision now. And we actually said yesterday in yesterday's game plan meeting, this is now a stock we're going to start to look to buy. So what happened now? So we actually ended up, now it's well bid, but we closed off the highs. That's not what we wanted to see. Remember, what do I want to see? What don't I want to see? What do I want to see? What don't I want to see? So as it's going up here, what do I want to see? I want to see a big green candle. Okay, good. Next day, what do I want to see? I want to see a big green candle. Okay, good. I can continue holding it. What do I want to see? Well, I want to see it well bid, which it was, but that was anything but a green candle, but it closed near the highs again. So, okay, I'm okay, but something has changed. What do I want to see? All right, big green candle. Great. What do I want to see? Something changed. Something changed. So this leads to this, makes you tighten up your trailing stop loss because 2 days in a row, something changed. Doesn't mean you bail on the trade. So now what happened here? What are we expecting to have happen in this stock today? Today, we're expecting a flat opening in this stock. Now, it's opening a little bit lower right now with the rest of the market that's down a bit. So because it opened here, pushed all the way up here and pulled back, selling came into the stock during the day. So we're looking to a flat to lower opening to be a buyer. That's it, not more complicated than that. All right, so Netflix, what are we looking to do in Netflix? This is a stock that 2 days ago we called out. We said any of these stocks that are pushing support in a bullish environment have traditionally failed on the breakdown. Again, I'm getting a lot of people messaging me about what do I do for a short sale right now? Why am I not calling out any short sales? Why would I be calling out short sales when the market's making new highs every day? Why would I be calling out short sales because when everything is, not everything, but most of the stocks that we're looking at, the easier money is on the long side to be a buyer. There's absolutely short sale opportunities. They're not the right opportunities. They're not the best opportunities. Trust me. The first 2 years of when I traded was after the internet boom, and stocks basically went down almost every day. I love short selling. It's not the right environment for it. So what we called out 2 days ago, and I'll show you another stock that had a similar scenario, we said that most likely it's going to barely break the support and rally in the other direction, and you can see for the next 2 days it did. The other one we're looking at that fit that same criteria was FSLY. It actually dipped and bounced. So the short sales are not following through immediately. But let's get back to setting up Netflix. Netflix coming into today is an interesting situation because can you look at Netflix and say there's a definite edge? Can you look at Netflix and say, man, buyers or sellers are definitely in charge of that stock. I definitely want to be involved in Netflix today. Hell no. Absolutely not. This is what I would classify as a do nothing. There's no edge. And I just want to point out something because Tesla was in a similar situation 2 days ago where you could see the stock really didn't have any bias where you couldn't look at it and say, okay, over the last month, nothing is really going on in this stock. If I allocate money to this stock, I'm just hoping it moves in my favor. Well, it did have 1 day, so it perked up a little bit. Now you're saying, okay, it had a bullish gap, closed near the high, not quite near the high, and then the next day it gapped again. So you had a bullish gap. So something interesting is happening, but now it's a melted candle at resistance. So the better trade in Netflix would be if it gets above this level where it's having a hard time. So it got up to that level and failed, got up to that level and failed. And you can see, got there, failed, pushed through, failed. And now yesterday got above there and couldn't stay there again, but looks like we're opening a little higher. So above 1650, Tesla is all of a sudden more interesting. But what I want to get across is, even despite this was the first day that made you sit up and say, oh, that's pretty interesting. But prior to that, there wasn't an edge over the last month. You want to trade something where there's an obvious edge, that's the easier money. Melted candle, melted candle, melted candle, melted candle. There's no edge here, none. And then look at this, melted candle, melted candle, melted candle, melted candle, melted candle. There's no edge. If a stock opens and closes in the same spot, how in the world can you say that there's an edge in that stock? There really isn't. And then coming 4 days of indecision, it trades lower. We have well offered, lower lows, lower highs, lower lows, lower highs, and then indecision again, right? And then you start something new. So this finally gives us something to sit up and say, okay, I'm going to take a look at Netflix now, but where does it make sense? Tesla. Gets up to that level. Now we know above that level is where it makes sense. Now, what I'm doing is not hard. A 5-year-old could do this. The problem for most traders is they don't do it. They don't do the work. You don't go into the day saying, what are the most obvious stocks I could take a look at today? And this applies for day traders too. So for example, let's just say for argument's sake, we're going to look at Square. We're going to look at it and say, okay, bullish gap, what do I expect to have happen? I expect this bullish gap to follow through. Now there's earnings in here, so it's a little bit different scenario. So you say, okay, what would I expect to have happen here after this? Okay, bullish gap, closed lower, closed on the lows. I would have expected this stock to actually open lower or open at the previous day's low and find buyers. That didn't happen. It actually opened higher again right away. So but this day here, so let's actually touch on that. If I'm looking for this stock to open at the previous day's low and it doesn't, and just opens higher, now we shift. I actually had somebody yesterday, can you tell me before the market opens exactly where I'm supposed to get in? No, no. If you're day trading, the entries are either at the previous day's high, previous day's low, or then you're getting day trading signals. If you're swing trading, it's a lot easier because you're predominantly using yesterday's high and yesterday's low as a swing trader. So this is a little bit different. So we actually moved, gapped higher, but it traded into an inside day. So nothing new happened here from the prior day. So now you're actually resetting it. So what should happen next if you're looking for a new trade? If this stock gaps up, holds, now you're looking for it to trade higher, right? What do I want to see? And you actually get the opposite of what you want to see. So there's no trade here. There is absolutely no trade in this stock. So it trades lower, right? Well offered, but now it fills the gap. So what would you expect the next day? We would expect buying to come in, which we get in the form of a melted candle. Remember, I said melted candles stop, pushes down or pushes up, right? We also got another melted candle, but this candle is now well bid. So that's different, right? So now we have well bid, but we do not have big green. We want to see, well bid candlesticks, but big green candlesticks. We want to see this, right? But we don't. So we still want to be a buyer of the stock. It gapped, pulled back, melted candle, stopped the move down right at the gap level. Well bid, but melted candle. Well bid, but melted candle. So we like this stock. We want to be long this stock. We're probably going to see a slightly higher open in this stock, but we're not going to trade it aggressively because we're seeing melted candles. We want to be long, but we're going to work the order. So every single day you keep working through your stock. So again, Netflix here is another good example. You should be able now to look at a stock like that and be like, oh my gosh, look at all those melted candles. This stock is a mess. Not only is it melted candles, but it's in a trading range. It's even one thing if they're moving, but look at all of the melted candles in this stock. Almost, I'm going to say probably 75% of the recent trading going back to July were melted candles for this stock. So what does that tell you about the stock? If you look at a stock and say, oh my God, 70% of the days it opens and closes in the same spot, there's nothing going on. There's no way you can say buyers, oh my gosh, the buyers are definitely in charge. Oh my gosh, the sellers are definitely in charge. No, as a matter of fact, quite the opposite. They're battling it out every day and it's ending up at a draw. Same exact spot, right? The same exact spot. And again, I'll keep going back to this other chart as an example because it's a really good one to get the picture. That's the opposite. Like that's a melted candle. Buyers are in charge. Buyers are in charge. Buyers are still in charge here because you had well bid, higher highs and higher lows, but something changed because it's a melted candle. So right in that candle, whether that's a day or a week, this is a weekly candlestick, and look at how much cleaner that picture looks from one week to the next. Buyers are in charge. Buyers are in charge. Something changed. Something changed. So those 2 weeks were probably very difficult. Buyers are in charge. Now this could change from day to day because if you see here, let's just say for argument's sake, this is the monthly candle, right? The month, this week here looks like, oh my gosh, they look perfectly green, right? But then if you go to the week, you can see that there were a couple of choppy weeks in there. So it's not just if the month is green, the whole week, that means we had 4 green weeks in a row. It's not necessarily the case. So now we got what? So now if you're looking at DocuSign and you're looking to trade the stock, your eyes should be like, oh my gosh, it's not obvious anymore. It's not this. This is obvious. This is not anymore. We have well bid buying to well offered to melted candle to buying to bearish to melted candle again. So longer term, the stock is still strong, but right now from week to week, it's getting choppy. And that's making the stock a little bit more challenging. Now, this was a really good week to trade. It was super strong, got great follow through. But now since then, the stock has been a little bit more challenging. So this is really where you start to put the pieces together to form good trades. Now, here's the interesting thing. I can hear you already thinking, well, a lot of those aren't perfect. Yeah, that's the point. That's exactly the point. If it's not perfect, you shouldn't be trading it. If you look at a chart like DocuSign where it's up 4 weeks in a row, 5 weeks in a row, 6 weeks in a row, and then all of a sudden you get a melted candle, you have to recognize that and say, okay, DocuSign changed. It's not perfect anymore. Let me start to look at something that's perfect right now. And if you're day trading, you do that from one day to the next. You're looking for well bid green, and then the next day you're looking for more well bid green, which means that the stock should be above the opening price. And as long as that happens, it's a lot easier to trade. That's where trading starts to become much more structured for you, and that's where it becomes organized. You eliminate all of the overwhelm because now you know exactly what you're looking for. If what you're looking for is not there, you don't trade it. If you can't recognize a good opportunity versus a crappy one, everything looks the same to you, and that's where trading frustration comes from. We're going to have losing trades, but we want losing trades to be on great ideas if and when they happen. You don't mind them because they're a part of doing business. It's when you can't see them that's the problem. And we looked at Roku as an example. The stock has been a mess for the better part of 6 weeks, and yet people still want to trade it. Why? There's no edge there. Hope that helped. Have a great day.